Good morning, traders. Welcome to the Phoenix Blue morning update for Tuesday, the 1st of March. Presented this morning by Tom Colley. I'm one of the traders here at Phoenix Blue. We will be taking a look at the markets in a moment, and we'll be paying particular attention to the Chinese manufacturing data. However, just want to mention this video comes out every morning before 9 a.m. UK time on weekdays. If you subscribe to the Phoenix Blue Trading YouTube channel, you'll get an email advising you the moment that it's actually uploaded, which is often considerably before 9 o'clock. Okay, so over to the news first. Overnight, we've had some negative building approvals figures from Australia, but this is what I want to talk to you about this morning. This is from China. This is the manufacturing PMI and the Caixin manufacturing PMI. They're both measures of manufacturing growth or otherwise in China, just slightly different measures. The important thing to know is that any figure above 50% is a growth in manufacturing. Any figure below 50% is contraction. So we can see from the numbers we got last night, we're seeing further contraction and a level of contraction which is ahead of what was forecast. If we look back historically, we can see 2013, 14, 15, and we can see months of really significant growth and on average growth through the year. Into 2005, things get a bit sketchy here. The second half of 2005 and into 2016, we can see a dramatic drop in production levels. Why is this so important? Because China is the factory of the world, and it also is hugely significant in the markets and in the world economy. It's worth pointing out, I'm showing you the manufacturing rather than the Caixin on this, and this is the more positive of the two figures. Overnight, we've also had the cash rate, which sticks at 2% from Australia, and the Bank of Australia rate statement. There wasn't anything significant coming out of that. All the usual phrases and what have you about waiting to see what happens, etc., etc. Going through today, we have manufacturing PMI for Great Britain. We have gross domestic product for Canada. We have the dairy index, as always, for New Zealand, the ISM manufacturing in the US, and then overnight again, gross domestic product for Australia. So quite a busy day for the first time for a few days on the news front. Okay, so having spoken about Chinese manufacturing, let's go over to the Far Eastern markets and start with the US dollar Chinese yuan exchange rate. Slight strengthening overnight here. This is interesting because what came out of the G20 meeting at the weekend was that the Chinese gave assurances that they wouldn't actively devalue this currency pair in order to strengthen the ability of China to export. So we'll be keeping an eye on that in the light of that. If we go over to the Shanghai Composite, a bearish day we had yesterday. I don't think we could see that on the charts yesterday morning. And then a more bullish day, or inside bullish day today. Now, other news out from China over the weekend is, or I think it was, sorry, I apologise, on Monday, was that the Chinese banks have been allowed to reduce the level of reserve that they hold against deposits. It was a reduction of 0.5%, and that means there'll be the equivalent of $100 billion available to Chinese banks, with the aim of making that available as lending to businesses. This highlights the fact that in the Chinese government and the Chinese economy seems to have gone from being overly concerned about stability to now being more concerned about a shortage in liquidity. So we'll be watching how that pans out over the next few weeks. Over on the Nikkei, the equities in Japan, another inside day within the range we've been talking about for the last couple of weeks. So nothing particularly significant to talk about there. Okay, the dollar index. We saw this strong move through on news on Friday. Yesterday we saw a pullback, then a strong move long before again coming back for a bit of a status quo doji bar position here, but our bias is very much bullish in this marketplace, and we're looking for levels at around 100 plus in the medium term. Okay, the euro reflecting the dollar strength. You may remember we had a trade on Friday from this level here, 1.106. We had a break and retest of this level at 1096. We added into our trade at that point. We've now got 2 trades in place. We've had profits off the table on this trade, stops at break even on this trade. And from both trades actually they're at break even, so we've got additional money locked in, and our T1 target is just below this level, but we're looking to see the market fall away to this level, and if we can break this level we'll be looking again to add into this market. Okay, on the other side of that we've got the Swissy US dollar CHF. The thick line through here is parity. The interesting thing here is yesterday we had a visit above this level and then a strong move back down. If the euro continues to decline, we would anticipate a move above parity, at which point we'll be looking for a pullback for an entry long on this pair as well. Okay, we spoke about New Zealand US dollar yesterday. We talked about how we were looking to take very small risks in order to build a position on this pair based on dollar strength, but without the supporting commitment to data analysis. This is the 4-hour chart that you can see here. We got our first entry in yesterday at this point. We got 20 pips up, at which point our strategy was to move our stop to break even, which we did. Unfortunately, price came back up and stopped us back out at that point. Sorry, I have to go back on that because I've gone one ahead. There we go. So yes, so we are actually out of that trade. We now won't be interested again until we're below this level, when again we'll be looking for a pullback, and our objective still remains to be building a position at very small risk until, if price were to come down here, we'd have a significant position with no risk on the table, looking for a move below these lows from January. If price closes above this level here, that will invalidate the whole picture, and that will mean that we've no more planned in that area this week. Over on the pound, we're bearish this because of the Brexit. We will be bearish this unless something unexpected appears. So we're looking here for a potential pullback to one of these 2 levels. We did have a small pullback yesterday, and we'll keep you updated on that. Over on the S&P, we had an entry at this level, 1969 on Friday. Price pulled away nicely. We hit our T1 late in the day on Friday. Our stops are at break even. We had a nice move through yesterday, and at the moment we've got a bearish bar. Our longer term target are these lows down at this level. One other thing to bring you up to date on our cocoa trade. We've been in this for a while now. There's an element of intraday volatility, as you'll see here, but we still very much like this trade. We believe that the commercials from the commitment of traders, the futures market, are just accumulating more short positions, which they can sell as the market goes higher, and that's how they will generate their profits. So we still see a level up here. Stops aren't as tight on commodities. We get up there, we're looking at a 3-to-1 risk to reward. Okay, that really brings us to the end of the review of the charts for this morning. There's some useful information here about how we analyse our charts, what we look to do, and how you can potentially move your trading to the next level. To talk to us about that, email us at info@phoenixblue.co.uk. You can come and have sit down and have a chat with us. It's totally without commitment. please do it. If you have any questions about this particular video, my email is tom@phoenixblue.co.uk, so please send any inquiries there. Okay, that's the end of the morning update for today. I'll look forward to speaking to you tomorrow. Goodbye.